Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, May the 5th. Today we got huge data. Non-farm payrolls came way higher than expected. We were expecting 180,000 and we got 253,000. Big increase in employment, in payrolls for non-farm. But remember, take a notice this revised 165,000 that is revised from 236,000. So this is a nuance, a detail that it's worth noting. And unemployment came lower. Wow. We were expecting a tick higher and we got a tick lower. Wow. Apart from that, hourly earnings month over month increasing way more than expected. Earnings year over year going higher from 4.3 revised from 4.2. We were expecting flat, but again higher. Weekly hours flat. Government payrolls a little bit lower, and payrolls on the manufacturing going green, and non-farm payrolls private almost more than double. So what does this mean? Does this mean that we are in an inflationary situation again? Employment going lower and non-farm payrolls, unemployment going lower and employment on the non-farm going higher? Is this good news for the economy, bad for the inflation? Or is this good news for the economy, good for the markets due to avoiding recession fears? We will take a look at the charts because right now everyone is super confused, and I have some details that you may like. First, let's talk about earnings. Shopify and Apple reported earnings yesterday after the close. Shopify announcing also a 20% of its workforce cut, and also reporting really good revenue. So earnings beat bottom and top, and Shopify is consumer discretionary. So it's showing consumer spending going well. That's inflationary. And the big one, Apple. Apple reports better than expected earnings due to iPhone sales. On Apple, let me just go through all these details because it's worth noting that it destroyed the beat on the EPS, it destroyed revenue. But there are some nuances. First, let's talk about the good. iPhone revenue came way higher. Actually, these offset the loss on, for example, Mac revenues and iPad revenues. Other products beat and services slightly lower. But look at this. Apple CFO Chief Luca Maestri said that the company expects overall revenue in the current quarter to decline about 3%. To decline by 3%. iPhone revenue increased 2%, so that's why they beat revenue. That offset by a lot the rest of the decline on the rest of the services and products that Apple provides. But look at these numbers. 31% of sales off last year. iPad declined nearly 13%. For the services, we got a 5.5 service increase year over year. But for example, Apple Watches and AirPods dropped 1%. So this is good overall, but it is showing something that, of course, for other stock companies could make dramatic results in the stock price. But for Apple, the biggest company publicly traded in the stock market, looks like that doesn't matter. People were just waiting for a little bit of beat because the expectations were really low, but people were just expecting for these kind of things to just go nuts on the bullish side. And that is what we got. We got an insane move. First, let's talk about the context. The context, this is the 1 hour chart on the Nasdaq. So we were wedging into the FOMC, we dropped, and I was mentioning in my previous videos that previous support resistance was now support and was broken, but during the overnight yesterday, we got yesterday's range was super low. From bottom to top is just 1%. 1%. If we check the daily, the candle that we got is just super, the range is just insane low. But if we see the context, I was watching this breakout to the upside with lower decreasing open interest on the futures on the Nasdaq, and with this support during the overnight, the ascending triangle should go lower, but sometimes in higher time frames it just explodes. Another thing that I was watching, look at this setup into the open. We got the numbers, the non-farm payroll numbers, we were coiling into the open. This is super clear setup. This yellow line is the descending trend line from the 1 hour chart, and this ascending is a slower time frame. A quick time frame on the 1 minute on this chart with the point of control just setting up right here. I mean, I was preparing for short, but this move is just, wow. This move is insane. And this is in part due to Apple's 4.64% on the day today. We got after our earnings. This white box is the previous gap that we were getting from yesterday. And if we analyze the daily chart looking for a 4% plus day on Apple, we have to go back to this day, November the 30th on 2022, Wednesday. Since more than 7 months, almost 8 months, Apple has not been trading like a beast. Obviously, earnings is fueling all this move, but 4.61% up on one of the biggest, if not the biggest stock in the stock market. Well, this is why we are going nuts. Even though the economic data is not really, really bullish, because I still think, let me say that I think Fed's job is just harder after this, because they will probably start thinking about raising rates again. So be careful with that. We will check bonds markets and interest rate futures charts to see what changed, because futures are up on that. So they are pricing in higher interest rates and no cuts. So let's think about that for a moment, because this kind of move is just fueled by Apple. It's basically Apple. Tesla is also 4%, but that's something that we usually see on Tesla. And certainly Tesla has been beaten up a lot and is trying to enter this gap. But on Apple, we have been pushing into these earnings for weeks and for months. And I'm surprised we are not trying to beat 176. I did a YouTube short on this setup. I'm really surprised we are not going higher. We just took off. We are just consolidating. Look at this. This is just boring. We are just stuck in here. Biden is right now speaking, so let's see if it continues higher, but there's still this level to the upside, and we are just consolidating here. This is good, but it's just boring because we either go straight up without any opportunity to just try to get in on the trade, or we just consolidate for hours and you die of boring. I mean, this chart is still setting up for a nice move higher. I wouldn't be surprised if into the afternoon, into power hour, we are confirming this previous resistance into the pullback, beautiful pullback, and to just consolidate up here to really burn a little bit of MACD and divergences and really look at this. We are really testing this support. So be careful if you are bearish. I am bearish, but if I see this setup, I will probably take it with a tight stop because also the 30-minute chart is setting up. This is setting up into a nice pullback for a bull flag into one of the big levels. But at this time, we have this pivot right here on the Nasdaq that might be an issue. So we might be rejected. But this is a nice setup because either we just resolve the bull flag into 13,300, that would be nice, or we reject later on. So either side, you just have a long setup and a bear setup and a short setup. But Apple is insanely strong today. I would not recommend shorting the overall market when Apple is this strong. So you decide on Friday afternoon, power hour, maybe it's too much risk. So let's talk now about some convergences. Gold is selling off. This is due to expecting higher interest rates due to better than expected non-farm payrolls and unemployment rate. So this is aligned with the fact that Feds might continue raising interest rates. Copper, Dr. Copper, aligned with the fact that we are supporting the economy. We are trying to be strong, but still, we are still in the overall context, we are bearish. Bitcoin is just trying to put some nice ascending triangle into higher lows for a maybe break of 31,000 next week. It might be. This is risk on, the same as the Russell, but Russell is completely destroyed. We are in the middle of the range. We have a green day today, nice, but I mean, I don't think markets are really going full throttle risk on right now. So be careful with that. Other things, the big ones, dollar is being destroyed. Yields are going really, really higher. We solved this. Look at this. Wow. Remember in my yesterday's video, I was looking for a closure below 3.72 in the 2-year yield, the yield that is more sensible to the Fed raising interest rates. And we just put a nice bottoming. And the 10-year also did that. So we are still not resolving to either side. We are still ranging. Market is super confused. Let me tell you, market and traders, investors are really confused. But what is interesting is the interest rates futures. Remember that we were pricing in like yesterday down here almost 100 basis points interest rates cuts on December. This is December. Right now we are 4.62% up on the day for a 4.4%. So this is more like 50 basis points in December. So this is showing you that the economy is stronger. We might not need cuts in order to support the economy, but that doesn't mean that Fed is not going to raise more interest rates. So be really careful with the interpretations because this is a super tricky situation. Super tricky situation. Let's go back to the Nasdaq. Well, Nasdaq is actually waking up. So remember what I said. This range might break to the upside. There's a lot of strength waiting on the backside. So I wouldn't be surprised if this just goes nuts with Apple following. Apple is not pushing. Meta is the only one that is trying to do things, but today is a super tricky day. So be really careful. And that's all from my side. I hope you had a good week. This week was plenty of opportunities, plenty of economic data to be truly a trader. I like opportunities, but it's a difficult, very difficult situation right now, a very difficult market. So let's see what happens, how we end up today, because this is setting up. Oof, I don't want to call it, but this might happen. I don't want to do this, but I don't know. I am prepared. I'm nimble. I'm flexible. So I will be prepared for this, but I would like for this and then start curling for a big move. But well, it is what it is. You have to trade. You have to trade the market you are in. Trade the market you are in, not the market that you would like to see. That's very important. That's all. I hope you found this video useful. If you did it, please click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always, and remember that the trading day is not over yet. You have my forecast and my remarks, but Friday afternoon, I will just recommend just take your gains on the week, take your losses, take everything, and just enjoy your day, enjoy your weekend, and see you on Monday. Be prepared for next week because this market is really pushing to the extremes. But remember, my best advice is to be disciplined and to manage your risk and your position size. Be patient and stay safe. So have a nice weekend and see you on Monday.